Lately we have been seeing cryptocurrencies constantly in the recipes for exiting the economic crisis. We discussed the contribution of digital currencies to the markets and their advantages against fiat currencies. So how does Bitcoin fight inflation, the nightmare of the markets? In this video, we talked about the relationship between Bitcoin and inflation. Before moving on to the video, do not forget to subscribe to my channel and like the video. In order to better understand the relationship between Bitcoin and inflation, we first need to know exactly what inflation is. Inflation, the increase in the general level of prices, that is, the price of goods sold for fiat money in a market. This is due to the devaluation of the fiat currency and the decrease in the purchasing power of the currency. While there are many reasons for the depreciation of fiat currencies, one of the main reasons is excess supply. Fiat currencies are tied to a central bank and are governed by monetary policies. There is no obstacle for central banks to print as much money as they want technically. But the unlimited supply of fiat currencies brings inflation. As the supply of money increases, its value and purchasing power decrease. Although it is a digital currency and has yet very limited use area, Bitcoin is compared to fiat currencies in every aspect. The increase in awareness and usage areas also contributes to the increase in the value of Bitcoin. Bitcoin, which we define as digital money, has not yet been legally defined. There are many who define Bitcoin as an asset, currency or security. Bitcoin is a decentralized and algorithm-managed electronic currency. The algorithm that Bitcoin is connected to cannot be interfered with from the outside. This means that the monetary policies determined when Bitcoin was designed cannot be changed. Bitcoin production does not increase with each passing year according to demand. On the contrary, production becomes more difficult. So, Bitcoin is not an inflationary currency. Bitcoin production is subject to certain rules and is designed to produce 21 million Bitcoins in total. In the currencies produced by mining, miners receive the block reward that comes out of the solved blocks. Every 210,000 blocks, which equates to about 4 years, the mining reward is halved. So, the amount of Bitcoin released every 4 years decreases. Thus, its supply decreases and its value increases. With this system, after the Bitcoin reward halving every 4 years, the internal value of Bitcoin is not affected by inflation. The cause and solutions of inflation are an ancient topic of discussion for traditional markets. But it is noteworthy that, in regions struggling with high inflation or so-called underdeveloped economies, the acceptance rate of financial innovations is very high. Underdeveloped economies see cryptocurrencies as a recipe for exiting the crisis or a springboard to catch up with global markets.